gap fills today, kind of what they are and how you play them. To me, they're one of the easiest, safest plays to make money. Usually the very high probability that they work. Quite often, sometimes the moves are big enough where you can make a lot of money. But so I'm gonna go through quite a few examples. I'll start off with Amazon. This happened today on Amazon. The way that you would identify this is that, you know, this thing closed yesterday way up here, it opened way down here, so it gapped down. And so if it gaps down, you'd expect it to fill the gap, and so it would fill it to the upside. And where you identify this is the last candle on Amazon at the close, being right about there. And then since the stock opened down here, opened, let's see, 1 6, yeah, so opened right about there. Then that shows you that you have a big gap because there's a huge gap in the chart between where it closed and where it opened. There's no transactions that took place, of course, in between that time. And so that is how you identify where there is a gap. There's literally just a big gap that you're going to see in the chart with no like candlestick patterns or anything. And so since it gapped down, like I said, you'd expect it to fill up. And of course, Amazon right out of the gate didn't fill the gap. So, really what you'd have done is, it was looking pretty bearish throughout the day, but you just watch that level and you know that if it does break above that into the gap, there's a very high chance that it's going to fill that gap up. And then, of course, later on near the day, you can see for whatever reason, Amazon turned around right here, and you can kind of tell it comes up, looks at that line, respects right here where that gap fill is, and then once it broke back above it, it did something that is usually very bullish, is it came back down to it, tested it, and bounced. And the reason that's very bullish is because that means that once it got back down to that price, buyers came back in. When it came back down this time, buyers came back in, they didn't keep selling. But anyway, that's the way you identify it. You're just going to take the close from the day before and where the open was at. And if there's a gap in between there, that's known as a gap, of course, and they have an extremely high chance of filling. So a gap down, you'd expect it to fill up. And Amazon also has done this. So that one, you filled it and then it reversed. So the easiest play on them is the fill. That's probably the highest probability. So that would have been from here to here. And then you can tell when it filled it, pretty much sold off it. It never really get any higher than that. And that just came into play as resistance. Those are big levels. They're important. They usually matter a lot. You can tell it played its resistance a couple times later on in the day when it filled that gap. But anyway, the highest probability is it filling the gap. After that, the next highest, easiest play you can play off of them is the gap fill, and then there will usually be a reversal. You had this almost perfectly on Amazon. It filled the gap, and it reversed a little bit here, but really you have the gap fill, and then you have a reversal to come all the way back down to where this gap started, where it really entered the gap. And then it closed at the resistance that was formed off that gap fill. So those are very important levels that you can see you could have kind of played with the whole day. You can go out still on Amazon and see, let's remove those. I'll find my own lines. But up here, you had another gap that was formed because there was the close the day before. So that'd be down here. And then it opened way up here. And so once it did start dropping, it filled the gap. So you were basically able to play that. I don't know, it looked like intraday. You could have played that and it filled the gap all the way down there. That would have been a lot of money if you would have especially had options and played that. And you had a gap fill, then you had a little bit of reversal where it goes off of it. But the easiest play is just, and that's what I would start out with, is filling the gap. And so it gapped up this time, which is, the opposite of what it did here. It gapped up, there's the close down there, this is the open right up here, and so you'd expect it to fill down. And they usually fill down pretty fast, pretty hard. I guess that did take a little bit over an hour or whatever, but very, very high probability that it's going to fill down to that gap. And those are usually important levels, like I showed in the other example, that will be respected. And then we can go into, let's see, well, actually, not really, I mean, I guess there'd be another one there. Good example of it. There's the close from the day before, actually a little bit off. There's the close from the day before. There's the open, gap fill up. And you can actually come down and see that it did pay attention to these levels again. And then you have a gap up that doesn't fill. And let me just say that, like, with these, I mean, yeah, it usually does work, but of course, no trading strategy is 100%. So as always, manage your risks. Don't always go ahead on any one play. You know, you can just tell you probably have a little bit of a line that you could put in as support. And I mean, anything, of course, would be easy as you just do it on your opening candle. And that could just act as your place where you manage risk. So it broke below that. You thought that you would enter puts, expecting it to have a gap fill. And once it broke back out above it, you just either exited or got into calls. And that's how you manage your risk on those. And so anyway, I'll go over and show you some on SPY. So for instance, today we had again one. I mean, one thing that I noticed is you have that wick. And well, let me say first that so you can, because the probabilities are in your favor, you know, on the open, you see that there's a chance of a gap fill up. Say, okay, that I'm getting in calls until it goes up here. You know, you can do that if you want to risk that. Me, what I do is I wait, and I'll lose a little bit of money doing this, I guess, like opportunity cost on money. Wait until I see something that is acting as some sort of resistance, and I want to see it break out above that. So I waited, and I saw that wick out there. And so the way I played it is I had that line, which is almost from where that reversal was in the body of those candles. But anyway, I waited until it broke above that wick, and then I played the gap fill. And so since it gapped down, because it opened way down here, you know, down from the close the day before, you'd expect it to fill up. And so you're going to put your line probably like right there. And once it broke out above that, I mean, it never really looked back. It hardly even pulled back, to be honest, at all. And it came perfectly up to it. And so you could have made a lot of money if you had bought calls right here and just held them on the fill. And then maybe later on in the day, you can tell there's a little bit of a reversible. Like I said, I would stay right now to playing the fills. That's your highest probability, is the fill. And that's one of your easier trades, I feel like. So you just identify there's a gap in the chart. And then you're just going to hold once it breaks into the gap. And once it fills the gap, that's when you would close your position, like close your calls here, and you take profit. And another example of, you know, well, first off, let me say, you want to be reasonable with these. Like, we've had a lot of volatility. So, you know, this gap is from 256 to about 258. So that's pretty reasonable to fill in one day. You'd kind of expect that. It's not uncommon for the SPY to move that much, so that's reasonable. Now, someone's asking me about Apple, and it's been moving up a lot lately. Now, Apple, okay, well, I guess Apple did have a intraday gap fill here, but and the way you would have played, or I would have played that, is I would have kind of played it either like that or like that off of those candles, probably like that off of those candles, because it's the body of a candle, and it had a little bit of an intraday gap fill. You can tell once you really get a confirmed break above it would be right here. I like to use 5-minute candles. Like I say, I want to see the body above them for what I would consider more of a confirmed break, and then it filled it. But really what I meant to show you on Apple is, and I actually have a screenshot of this already. Let's see, I think it's this one. I know that's actually okay. Well, this is a good example too. First, this was just me showing you like in the past a gap on the SPY, and this is me. You can go back and find this on your charts just to show you that this works. But I'm just showing you that this is me trading a gap ahead of time. You can see the timestamp up there, and so that's what I noticed is as the setup, and then I noticed that was probably a little line you expect a gap at. Resistance at. But anyway, on the way up, that's where I would enter calls, and then I was expecting it to hit the gap right there and reverse. But either way, I would collect profit from my calls. What I was going to show you on Apple is that, so this is the gap fill that I've been looking at on Apple, saying that some people could swing it. That's the green line is where I noticed that I would have entered. Like I said, sometimes I miss out on a little bit of money, but I want to wait until there's some sort of resistance established, and then I want to see people break above it. And so that's when I would enter it on Apple. But anyway, a gap of this size, Apple does generally not move that much in one day. It just doesn't usually happen. That's probably one of the bigger days right there. One of the bigger moves I've seen Apple do in a day. But anyway, so it's not going to fill that in one day. This is one that you would expect to swing. So you could maybe buy something here, either actually buy the stock, or if you wanted to buy options with a little bit further out expiration, and then you could hold these expecting for this gap to fill. And really, Apple, you can already tell, is doing it, and that's probably about where Apple bounced right there. I don't know if it'll all the way fill the gap. But anyway, it's filled it pretty far. And so that's how you could swing, for instance, for a gap fill. But anyway, I can definitely do a video with a lot more examples, or if this spawns any questions, and if you have any questions, ask me. Like I said, if you want another maybe more advanced video with like more scenarios, but I think that's a pretty good starter to show you what gaps are. They're literally just gaps in the chart, and they're very high probability plays, and kind of how you play them, and your entries and exits. So I hope that helps y'all out.